Ashvin Parekh, the MD or rather Managing Partner at Ashvin Parekh Advisory Services LLP. We've also got with us Krishnan ASV to talk about how the street should be viewing banks and financial services right now from SBI Caps. Gentlemen, morning. Ashvin, if I could begin the discussion with you, and I want to take a leaf from what we heard from Uday Kotak, warning of risks in the financial sector impacting the real economy. Would that also mean then slower growth and lower job creation with its own challenges and consequences?
Yeah, so I mean, certainly, I certainly, when I was analyzing Mr. Kotak's statement, I agree that there are 2 or 3 stress areas in the system which we need to watch for. One, of course, is this entire question about the liquidity, particularly with the NBFCs, and the inherent mismatch, in their asset and liability is something that the system will have to address. I mean, the dependence of NBFCs on public finance is something that is a cause of worry, quite clearly. The extent to which they depend on the public funds, they should include both the banking as well as the funds raised from the markets. So that was one. The second, of course, is going forward, I certainly see now some amount of distress or some amount of improvement in the NPA recovery. Gradually, the NCLTA and IBC is settling down. We will see more and more resolutions coming in. I suppose from the economy point of view also, if the monsoon is good and if we find that the inflation, particularly on account of oil prices, is tamed, then I suppose the financial sector should do well, both in terms of recovery, gradual recovery, and also in terms of proper lending, because the quality of lending will gradually grow when the demand for funds from the borrowers will start arising. 2 or 3 things that come to my mind for the next 1 or 2 quarters, and they go with sort of, the financial, the care or the control we should keep on financial services industry. One is the consolidation of banking, which seems to be in the air. We've already seen the consolidation announced of 3 public sector banks. There is a talk of 3 more public sector banks getting consolidated. So all said and done, it's going to be eventful, let's say next 6 months. But at the same time, I do agree that if the men perform, then they will really outshine the boys, quite clearly.
Okay, interesting there. Let me just bring Krishnan in as well. Krishnan, just to take that forward, where perhaps do you see the strength with regards to certain NBFCs? If we're looking at more M&As as well, whether it's to do with banks or NBFCs, what are some of the possible combinations?
Yeah, hi, May. Thanks for having me on the show. Very clearly, this polarization has existed for a very long time in the banking and the BFSI sector. Well-run NBFCs that tend to deliver consistent shareholder returns are obviously always better priced. Investors are more than happy to pay a premium for the fact that they are predictable and they are consistent in what they deliver. What we have generally seen is so because of the PSU banks and the AQR and the post-AQR, whatever supervisory oversight that happened, very clearly PSU banks went into a contraction mode. And we have seen over the last 5-6 years, I think 90% of the earnings are accruing to private sector banks and well-run NBFCs. Very clearly, the valuation wedge that has opened up between the laggards and the winners has widened that much more. And we believe that will continue until it reaches in the medium term. I think all banks will necessarily become safe banks. And when that happens, I think there will be very little to choose for you between banks. Most of them will be delivering 1.2 to 1.5% ROA. That's not happening right now, but I think that's where the banking sector will move.
Krishnan, just to
so you need strong hands on the table. To that extent, you need to shake.
Right, fair point. I just want to talk a little further about Krishnan, what Uday Kotak was saying, and he said that there are 3 solutions which can perhaps resolve this financial crisis? He's saying it's raising equity, it's consolidation, and then there is mortality. Which banks and NBFCs, according to you, could fall into these categories, or perhaps look at these instruments to help the liquidity situation a little better?
So I would think, so if we were to start with different buckets within the BFSI universe, there would be a lot of PSU banks which do not have standalone currency to go and raise money. So obviously they are not going to fall in bucket one where they can raise equity on their own, correct? So for them, the reality will be either to consolidate or have some element of natural mortality. Now, being a PSU bank, that will not be allowed. So essentially, they fall into the second bucket very clearly. There are also a lot of mid-sized, smaller private sector banks which have remained small for a very long period of time and remain suboptimal as far as ROEs are concerned. So to that extent, you neither have scale, you neither have returns. So those are the banks which probably open themselves up for either M&A as M&A candidates, where they could be takeover candidates, or mortality. Now in the Indian context, we have never seen a bank going under. To that extent, I believe policymakers will never experiment allowing a bank to go under. We have already seen what happened with the global financial crisis. And the interconnectivity within the financial sector is only rising. So to that extent, I don't see that as a possibility where you allow an institution to die. But consolidation, yes, where you move into stronger hands, safer hands, is that possible? I think that would be true, yes.
Ashvin,
there are only a handful of names which can actually raise money on their own. That would be the large private.
Sure, Krishna. Let me just bring Ashvin back in as well into this. Ashvin, when we're talking about further consolidation, have you also looked at possible combinations? Kotak has said that there are three solutions: raising equity, consolidation, and mortality. Which of the banks and NBFCs would fall into these specific categories as well?
Yeah, so let's look at, let's say, the space, the BFSI space to begin with. There are two things which are in the air at the moment. One is the consolidation within the banking sector itself. So, and that's going to be largely a public sector kind of a play. There are two interesting cases. We already saw in IDFC Capital, we saw merger of an NBFC with a bank. And then there is one in the air, which is, now seeking a regulatory approval, and that also should be the Indiabulls Lakshmi Vilas one. So that should be an interesting thing to watch. I suppose one thing is becoming very clear: the kind of connect that NBFCs possess with the borrowers, and particularly the NBFCs who've been able to manage their asset liability in terms of they have their portfolios with manageable durations. So there we certainly find that they would aspire, to work with either banks. If both of them are, they come under, they are not held by businesses, or they do not have speculative business like real estate or things like those, then the regulator might allow, some kind of a consolidation in that particular area. Equity is the other one, and I certainly see, if you really analyze the equity raised by particularly private sector banking, public sector banking is still in a pause situation, but going forward I will certainly see that once their balance sheets improve with some recovery from the NCLT IBC process, then they will also be ready to take their equity to the market, raise some further equity. Because let's accept that, let's say, the amount of capital that the government has put in the last 6 quarters to 7 quarters out of the capital expansion program that the government followed, does give some leeway to the public sector banks to raise some more capital from the market. That was the original plan. If you go back to the original plan of 211,000 crore of capital to be raised, it did include 54,000 crores of capital to be raised by public sector banks from the market. So, to that extent, some leeway may be available to some public sector banks. NBFCs, the rest of them, the progressive ones, those who are performing well, is one category, but the others, one may have to see what really be the fate of, neither will they be able to raise more capital because they are still a concern, nor will they really be able to raise more funds from the public system. So that is something to watch now as we go along.
Ashwin, I just want to understand the level of concern at this point. I mean, whether, the liquidity crunch is really anticipated more on the back of a cleanup versus any more surprises. Because, we've seen the reaction to Yes Bank, of course, but we're also tracking, any more news that may come out of, for example, what we heard with regards to the court directive to the RBI in terms of transparency and so on. And, going forward, do you feel the worst is over? How are you viewing things?
No, I don't think so. I mean, I do agree that this new set of questions, arising, or really looking at the regulator and the kind of, let's say, independence he enjoys in regulating both the private sector and the public sector banking, those questions do remain. And I suppose, they will continue till some clarity or some real, let's say, government step in or the legislative step in happens. But I do believe, that if I set aside those vectors, from the liquidity point of view, two important things now as we go forward. One is we'll have to keep a close watch on the oil prices as a nation, as an economy, because it could really create disruptions quite clearly. I mean, not just in the economy, but also in the banking system. Because then the regulator will have to really keep the liquidity, floating in the system. So that is one concern that I certainly do believe to be there. The second is this entire issue about now the new NCLT process. We are waiting for the regulator to come out with new set of regulations, with February 12 circular being withdrawn. I mean, some parts of it, not the entire, but the parts associated with NCLT IBC processes may have to be redesigned. So we are eagerly waiting for the regulator to come out with some progressive regulations which will really enable the banking system in recovering fast. One thing I would like to observe, I mean, there was nothing particularly wrong with the IBC NCLT process in terms of, I mean, going back therefore to S4A or SDR or whatever could have its own challenges is what I believe. Let me articulate this. I mean, in the earlier system, a lot of decision making which was given to the banking earlier, and they were not in a position to make those decisions in fear of investigation at a later date, was now being passed on to the resolution professionals and to the COC and also to the IBC process. Now what may happen is, with 12th February circular being withdrawn and new processes or new regulations in this space are awaited, I mean, the banking system itself is in a little bit of it, particularly public sector banking or banking where there are large, let's say, borrowers and you have a large number of COC members. So there things are going to be a little difficult. It's really important to see how fast between the regulator and the policy makers they resolve this particular issue.
A work in progress, and I guess it's going to take some time before things settle. Would have loved to chat more, but Krishna and Ashwin, both of you, thank you so much for taking the time. I'll have to let you go on this note. Okay, that's the view coming in on banks and financials.